What's going on, guys? Bexio back, and today we're going to talk about ways to invest $10,000 because that is what the typical average American has in their savings account. And if you can put that to work, you can get a much better return on that than just holding it in cash in a savings account. And after what we've seen inflation do in such a short period of time, being over 8%, just eating away your purchasing power, and having it being such a high percent for such a short period of time, we're seeing the effects of inflation, of higher prices of goods, the gas price, everything just skyrocketing. And it feels like you can't buy a lot of things. And this effect happens over a long period of time, every single time, because of the dollar's design to go down in value. So even if we took that $10,000 in savings and took it at the average 2% inflation rate, if you span that over 30 years, that $10,000 would be worth $5,454, meaning it would be almost cut in half in purchasing power just by sitting in cash and trying to be safe or not investing it. So you have a guaranteed loss of almost 50% losing your purchasing power and not being able to buy things that you once would have been able to buy with no problem. Whereas if you took that exact same scenario with $10,000 invested in the S&P 500 over a 30-year period, that would be worth $76,122 on the low end on a 7% return, or on the high end of a 10% return, it would be worth $174,494. So you can see the vast difference of 10,000 in cash getting cut in half basically by inflation, or 10,000 in the stock market in the S&P 500 being able to rise to new heights. But before you jump into getting invested and trying to do all of these things, you first want to build your emergency fund. Ideally, the size should be around an ability to fund your expenses for 3 to 6 months in case anything happens that is unexpected that you can't control. Because the last thing you want to do is be forced to sell assets at a loss and lock in losses, as well as lose that money for an emergency in which you was unexpected, and now you just put yourself in a very terrible situation. So building your emergency fund is a massively important step into investing, even though it's technically not investing itself. And this is also massively important because it allows you to take the risk of investing, to let your money sit there and not worry about if it goes down 1%, 10%, 20%, or even 30% like we've been seeing recently in like the NASDAQ or Russell. That you can sit there and know you don't need this money right now. You have an emergency fund. If things do go wrong, you don't have to pull from your stocks, and you can let the money sit in there and go to work over a long period of time, which is historically shown to grow in value. A couple of bank accounts you could use, or savings accounts you could use to use this or store this emergency fund, could be something like Ally Bank, which offers, I think, 0.5% in interest. So pretty good in what's going on today. Until rates are going up, rates for these accounts are going to lag behind, but eventually they'll go up. Or the one I use is Yada. They have kind of a lottery system to basically get you around 2% savings, or savings rate per year, which is a very, very good rate. Obviously, 2% is a lot better than 0.5%, but there is a lottery system type thing. But even accounting for all of these lotteries, just winning minimum stuff and not having to go crazy, not having to win everything, you can still get 2% returns, which is massive. So even on the low end, you will be able to break even on inflation at the bare minimum at 2% average inflation. If inflation stays at 8%, I mean, we're all screwed. But if it gets back to the 2% normal type of inflation, then 2% a year in savings rate, you're going to be able to break even, and you're not even risking that money to inflation. Now, after you sort out your emergency fund and get that set in place, now you can take steps towards investing and making investments for your portfolio. And the first step is, again, building foundation for your portfolio, which are things like index funds and ETF. Index funds and ETFs allow you to get a low volatile entry to the stock market, where it's just a broad market of everything, kind of just getting an entrance into the stock market and being able to not have massive 5-10% daily swings, and just kind of lower the volatility with being diversified in many companies, as well as you can get a dividend, so a little bit of passive income from them as well. Some of the most popular ones are going to be VTI or VOO, which VTI is Vanguard's total like US broad market fund, and then VOO is the S&P 500. It tracks that as closely as it can. So a lot of just open super public funds that are super popular, and a lot of people use Vanguard, so it's just a very trusted one, very popular, and available on any stock trading app. You can get started investing in ETFs and all of these things. Start investing with things like Robinhood, Webull, Public. All of them offer the same type of basic experience of being able to get into the market first and make your investments and build your portfolio. And after you build a decent sized chunk in an ETF in like VTI, VOO, something like that, you can venture out into individual stocks a little bit. I would stick with blue chips and large cap stocks first, even going out into individual stocks, and continue building the stability into your portfolio so that you don't have massive swings up or massive swings down. Because obviously, if it's a massive swing down, then it takes a way more massive swing up just to break even, and we don't want to go through all of that. So, blue chips, large caps, continue building out stability, and maybe throwing in a couple of risky plays with like medium cap, small cap companies or growth companies that have huge potential in the future, but not allocating so much that those swings of volatility in those stocks really affect your whole portfolio. But if you want to take on just even more risk, if the individual stocks aren't enough for you, and going down into medium cap, small cap stocks still aren't enough for you, then cryptocurrency could be for you, but really only Bitcoin. And I say really only Bitcoin because we've seen what happens with Luna. It went to zero, and countless coins like that happen all of the time. And I focus on long-term investing. So when we look at crypto, the long-term projects that are always there is Bitcoin. That's it. And I mean, recently Ethereum, but who knows with Ethereum? I think Bitcoin and Ethereum you can kind of have as stability 1 and 2. After that, it's complete randomness, and you just don't even want to venture out further into there. But if you do, you don't have very good odds on your side. If we look back to just the top coins in the 2017 era for the top 100 coins, we can see that obviously Bitcoin and Ethereum are number 1 and 2. But out of 100 coins, excluding Bitcoin and Ethereum, there were 2 coins that went up in value in 2021, 2022, in the next 5 years. And that means that you have a 2% chance to get a coin or pick an altcoin that goes up in value in a 5-year period. That is insane. If it's not going up in value in 5 years, then that's crazy. It has to go up in value in 5 years, even to just go up against inflation, if nothing else. But if a stock can't go up in a 5-year period, then there might be something wrong and you look into it. Just like if cryptos can't go up in a 5-year period, there might be something wrong and it might be time to move away from them, especially considering that Bitcoin halvings are every 4 years, and that kicks off a bull cycle where Bitcoin can reach new all-time highs. But if Bitcoin reaches a new all-time highs and altcoins can't even manage to do that, then I mean, what's the point? You are better off holding Bitcoin. And even with those 2 examples from 2017 that actually did go on to set new all-time highs, they barely beat what Bitcoin made in returns. So you're better off just buying and holding Bitcoin, maybe some Ethereum, but not really venturing off further than that. And the final thing to maybe get into would be real estate. And with $10,000, it seems not so likely that you'd be able to do that. But there are some apps like Fundrise that lets you kind of get involved in real estate. I don't know exactly how it works. I've never used it. I know some people are using it and seeing how it goes. So I'm waiting kind of for the bigger YouTubers and people with way more money to throw away to kind of see how it goes for them before I even look at this app. But it is there, it does exist to kind of get involved in real estate without needing tons and tons of money or time to manage properties. But if you did want to get into real estate and didn't want to go down this risky experimental path of Fundrise, you could buy REITs, which are just like ETFs. They trade just like them on Robinhood, Webull, Public, all of those kinds of brokerages. And those are just real estate funds where they either have apartment complexes, they could have malls, they could have a bunch of different things in them. But basically, the rental income from either apartment complexes or commercial real estate, whatever is generated, gets shared between the shareholders of the REIT. So you're pretty much in real estate without needing to be in, the house itself or a bunch of buildings themselves, managing them and collecting rent. You just get to be way more passive into more commercial type stuff. But that's 5 ways that you can invest $10,000 today to make it go to work for you and make sure that you can put yourself in a better spot in the future and not let inflation eat away at everything that you're trying to save. Because we all know the saying, you cannot save your way to wealth, you have to invest your way there. And we see that with before. In 30-year period, if you're saving, your money gets cut in half. If you're investing, your money 10x's. So it's a very different story between the two. But that's going to do it for this video, guys. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next video.